right. Hey, good morning, everybody. Oh. Let me remind you that trading is risky, not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. We appreciate you. We work hard to keep you happy, and we love it. We enjoy the privilege. Do these sessions Monday through Friday here at Forex.Today, except for non-farm payrolls, which is typically the first Friday of the month. I've been doing that webinar at FX Street for just about 12 years now. Now I'm just getting wound up. So ask questions, get involved, participation is encouraged. And let's see, you should see charts. Wonderful. So we got a lot going on in the world. Let me get Forex.Today. I had that somewhere. Now I don't see it. Life is great. Life is grand. Life is good. Cool. I have it up here. All right. So we have a lot going on in the world. I thought what we would do is start our day by going through the calendar for the week and look for risk and opportunity events. Today, this week, I'd like to dedicate to the Great British Pound. And once we go through the calendar, you will see why. On top of that, today is Hurricane Irma Day here in Atlanta, Georgia. I'm hosting 2 human refugees and I think 3, maybe 4 cats. I'm not quite sure. But everybody's safe and sound. But today we get hit today. It's our turn. So in and around Atlanta, for some reason, grocery stores are empty and gasoline stations are empty, except for salad. People are scrambling. They're buying potato chips. They're buying water. They're buying frozen hamburgers, but they're not buying salad. Isn't that funny? They're not hoarding salad. Salad's on super sale. So anyways, very interesting. So everyone's safe and sound. We're good. Let's make some money. All right, let's go to the calendar. Un momento, por favor. News, calendar. So 3 weeks ago, I traded with you guys through a typhoon. Now I'm trading through a hurricane. You guys are unstoppable. Okay, I'm going to zoom in a little bit. What do you think? $1.50 is good. And let's see. All right, I guess we'll leave it this way. You know, it doesn't show it doesn't show the Chinese news over the weekend, and it was pretty good, better than expected. So yeah, it was good, huh? So you put that down on your macro analysis, right? How could China do well if the rest of the world is not doing well? Suppose they could release a stimulus package that stimulates local supply and demand activity, but it's a manufacturing and export economy. So by definition, if China's doing good, the rest of the world must be doing good as well, right? See what I mean? Or they fudge the numbers, right? No necessary, as they say. So no necessary. So just generally, pretty good. Going into tomorrow, By the way, schools are closed today. Good thing there's nothing on the calendar. Got a lot going on today, though, so I'm not really going to take the day off. Tuesday, look at this. PPI, core PPI, CPI, core CPI, and then the inflation hearings. All tomorrow, all Great British Pound, all inflationary data, huge. The inflation report is huge, huge, huge. So there you go. So I think we talked about this last week where you should probably start trading last week, the British pound. Sort of like last week was pro Canadian dollar. Well, you should have been front running that. See what I mean? Oh, yes. Thank you, Joe. Today is also the something anniversary, 13th anniversary. I don't even know, to be honest with you. 16th anniversary of 9/11. But I don't believe Wall Street shut down for that. And it's Ethiopian New Year. We know that, of course, that goes without saying. Thing about 9/11 is the weekend after 9/11, my fiance, girlfriend, I don't think she was my wife, my current wife, my only wife. How do you say it? I don't know if I was engaged yet or not. We'll call her my girlfriend. My girlfriend at the time and I, we had plans the following weekend go to New York City. She'd never been. I'm like, oh, I'll take you everywhere. And I book dinner at the Windows of the World, top of the. Yeah, but see, I don't think she was my fiance yet. Honestly, I don't know. 16 years ago. But anyways, um, yeah. So we were supposed to be on top of the Twin Towers. So I called up, I think it was flying American Airlines, called them up. I'm like, I gave my tickets back. I'm like, I heard people are trying to get out of New York City. I have New Yorkers calling me, telling me it's like the end of the world and people are trying to get out and China people are getting in. And it was just chaotic. So I said, I'd like to cancel my 2 tickets. And they're like, all right, well, you're going to lose your money. Wait, what? I'm just trying to give it back so people can get home and see their family or get out, whatever. And they're like, yeah, screw you. So I gave the tickets back and lost the money. Yeah, thank you, American Airlines. By the way, I'm platinum now on Delta. There you go. So anyway, so tomorrow, huge, huge, huge British pound day, all about inflation. And remember, there's two things going on there. We have Brexit, and I think isn't there another vote of some sort today out of the UK or this evening? What are they voting about? That's the worst part of democracy, huh? Let's all get around, talk, 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 talk. Is that what it is? Okay, then that's fine. Let's talk about sanctions. I thought there was some other Brexit related thing out of the UK, some vote of something. Yeah, Joe, stop reading and start talking to people. That's the thing. I stopped reading. So, anyways, lots of stuff going on in the UK, specifically today. So the issues are Brexit again, and the devaluation of the pound. Did it lead to inflation? But we've had a pound rally over the last 8 weeks or so. Yeah, okay, sure. That's what I'm talking about, right? UK Parliament debate on the Brexit bill, right? They call it like the Great Brexit bill or something. I don't know. I don't have boots on the ground there, but there is something going on, right, Shaw? And it's tomorrow. Okay. But Joe's like, oh, the one tomorrow. Well, yeah, of course. Yeah, well, Jim says it's hot air. Well, that's the downside of democracy, right? Everyone sits around talks and no one ever does anything, which is nice in the beginning. But then let's make a decision and do it, right? All right, let's go into Wednesday. Blah 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 blah. European industrial production. It's like a joke. PPI, fine. Not the biggest thing in the United States of America. Probably a slight increase is what I'm imagining would be expected. Wednesday is oil inventory, so again, an opportunity to be scalping some CAD. And then the Asian session. Nice. Good Asian session Wednesday night, Thursday morning. Inflation expectations out of Australia. Aussie jobs report. All this stuff good. And you probably know this, but I say it every time. Aussie job report, if it spikes and I have some sort of profit, my intention with Aussie jobs report is to take the profit. Just for some reason, my experience, good or bad, whatever it is, my experience is if it jumps 75 pips, it's going to collapse 75 pips. So if you're up 75 pips, take your money and run. My old story is one time I was the bull and bear at the Waldorf Astoria. And I'm sitting there eating a steak and drinking a red wine and chatting with the boys, Norm and Cliff. And all of a sudden I'm like, oh, I gotta go. Can you just watch my stuff? I'm gonna be gone like a half an hour. I just have to go up to my hotel room. I'm gonna trade the Aussie jobs report. It's gonna be unusually good. It's gonna surprise the world. I'm gonna make a quick buck and then I'll be right back. And they're like, it's gonna be a surprise? How do you know that? I'm like, I've just done the research and people don't do the research, so they're always surprised because they don't know anything. So, anyways, I'm watching my clock. So I go up, go to the hotel room. I'm all set and everything. Boom! Huge surprise. The Aussie dollar spikes up. I catch like 100 pips. I'm like, nice. And I go back down. And they're like, how did it go? I'm like, huge upside surprise. Just paid for the whole day. Do you have any Cabernet sauce for the steak? But that's Aussie Jobs report. Just that's the nature of that beast. Sometimes when you get a news event like that and you're up that much, 75 or 100 pips quick, you're like, man, I'm going to sit on this, and when they hear about it the next day, they'll take it even further, right? For some reason, not Aussie Jobs report. Yeah, so you got that too, right? Yeah, so there you go. It's just that's it. So nature of that beast. And then Chinese data later, Wednesday night, Thursday morning, out of China. Some great trading. That's a great trading Asian session. Then the sun rises in Europe on Thursday. Retail sales. See, inflation, retail sales, somewhat tied together, don't you think? So there was a time when the pound was quite weak and it spurred some spending, also created some inflation. And then people started talking about what will Mark Carney at the Bank of England do to address these things, like a collapsing pound. And somebody said, well, that might create inflation. So to protect the pound and to attack inflation, he could raise interest rates. And so the pound went up. So he hasn't done anything. But anyways, you see what I mean? So there may be less inflation, less retail sales. So anyways, we're concerned. These are data points that people care about. Do people spend? Well, at first, when the pound was weak, foreigners came in and started buying stuff. Remember, I said it was a good time to like go to the UK and buy a watch. You know, just because the watch is going to be the same price, but the pound is going to be weaker. So that kind of thing. Well, that's kind of gone away, and the pound's rallied a bit. So are the locals spending? And that's really, you know, on the micro level now. Now we're talking about microeconomics. Um, do people have jobs? Are they confident in the jobs? Because if they're not confident in the job, they're not confident in the future, right? So if they're not confident about the future, they're not going to spend. In fact, what usually happens is people save and people pay down their debt. You can track all this stuff, and this, you know, these components and subcomponents go into creating GDP, right? You guys remember how to construct GDP, right? What do you call it? Consumption plus what? So you got C plus. So consumption is consumers spending. That's what you do, right? What's the I? That's business spending, what we call investment. Then you have your government. They have spending, but they spend what they said they were going to spend last year. So like they create a budget this year and they tell you what they're going to spend next year. And that has nothing to do with the economy, right? Let's say the economy worsens. Well, let's say the economy gets better. Doesn't matter. The government's going to spend what they're going to spend, and they're probably going to spend a little bit more than they said, but whatever, right? And then there's this whole thing, import and export, right? Exports plus imports. All right. So consumption plus investment plus government spending, uh, imports minus exports. That's your whole thing. So, you know, consumption, you'd think a subcomponent of consumption would be sales, right? Retail sales. When you went to the store, how much did you buy? And that's going to create activity, right? So you got people working at the store has paying rent, the store is paying for electrical bills, the store is advertising in the newspaper, the store is ordering new products, so they have to be shipped on trucks from their warehouse to all the different stores. But then there's manufacturers around the United States or at various ports where products come in, and then that needs to be shipped to the warehouses, right? All of this requires jobs, and all these employees eat at restaurants and go to movie theaters and buy shoes for the kids on the first day of school, and it all snowballs, right? So this consumption is very important. Okay. So anyways, going to be very important. Oops. Okay, so blah, 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 blah. So we're on Thursday. Great. So retail sales, great. Then what? Central bank meeting. Once again, Bank of England. See what's going on here? We have the inflation, PPI, right, which is pre-consumer. This is inflation in the widgets and gadgets that go into making a particular product. And then you have CPI, which is the actual product, right? So there's inflationary data. And then there's retail sales. Are people buying stuff? Maybe the inflation's good, maybe the inflation's bad, right? What if there's inflation because everybody's rich? Or what if you go to Venezuela where everybody's poor, but prices are extremely high? right? There's good and bad inflation, and the rate of change of inflation is important. So anyway, so you get to the retail sales, and then later on in the week, central banking, meeting minutes, interest rate decisions, busy Great British Pound week. Yeah, Jeremy says you have nominal GDP, you have real GDP, and there's various different versions as well of even all of those things. But at the end of the day, what they're trying to do is measure, activity. Okay. So another opportunity to download meeting minutes. Are you going to read the Bank of England meeting minutes? It's a good place to start. Right? Yeah. That's one thing I like about Ryan. I'm like, Ryan, you should probably read the Bank of England meeting minutes. Boom. He's going to read it. Just, that's it. Okay, and then we get to the United States, and now we start the same sort of process. Retail sales is coming up, and then here we are, CPI. CPI is a good one. See, PPI, Producer Price Index, it's usually the canary in the coal mine, but by the time you see it, it's too late anyways. Yeah, Jeremy says, who cares about the growth? Just give me inflation. Well, then you're looking at like Venezuela. Nobody has a job, and prices are high. There's your inflation. Tristan, right on the central banking websites, they release these. It's public information. It's a great place to start. And they usually say things like, some of the members felt this, and some of the members felt that, and they kind of, so they don't say anything specific, but you get an idea of what they talk about. Okay. So, anyways, yeah, you don't want inflation without growth. So, in commenting on your comment, you do care about the growth. You don't want just inflation. In fact, inflation's bad. What you want is, let's say 3% growth, 2% inflation or something, right? Which is better than 3% inflation, 1% growth. So, for example, how does Venezuela create 1,000% inflation when there's no economic activity? Well, what they did was borrow money to build things like soccer stadiums, unusually large and beautiful soccer stadiums, and then pay for the debt by printing money. So Peter says devalue the currency. Yeah, but not really. I mean, yeah, their currency falls, but it's not necessarily devaluing currency. They're increasing money supply. Right? They're monetizing their debt. Put it this way, I think there are two places in the entire world that doesn't sell Coca-Cola. North Korea and Venezuela. Venezuela simply doesn't sell it anymore because in terms of local money, a can of Coke would cost you like $1,000 because they have to import some of the ingredients and the local currency is, so like let's say you had to import sugar to make the Coke. What if sugar costs the same as gold? So you could make the Coke, but no one could possibly afford to buy it. So you're like, Coca-Cola just pulled out. They're like, there's nothing we can do here. So pretty amazing stuff. So yeah, so we got CPI late Thursday out of the United States of America. And then Friday, I thought we had some other USD stuff here. Oh yeah, good. Retail sales, there it is. Industrial production capacity utilization. This is all subcomponents of GDP again. Okay, so if retail sales go up, new orders need to happen. Factories are working. Well, how much of the capacity? So like if a factory can make 1 million t-shirts a month, are they making 800,000 t-shirts a month? Are they making 900,000 t-shirts a month? So we know the capacity, but how much of that capacity are we utilizing, right? So that's what the industrial production and capacity utilization statistics go in there. And there's subcomponents of GDP. Because if those numbers are going up, then either consumption is going up, right? But what about investment? What if a factory got 1.3 million orders for T-shirts for next month, and the factory owner is like, man, if I get the factory working at 100%, I cannot produce 1.3 million shirts. I'm going to need to expand or buy more efficient machinery, and that goes into industrial production. Okay, and they're going to need to order this equipment, and you can start seeing that in the data as well. So, for example, Japan just releases that machinery order data and stuff. So it's all pretty interesting. And then, of course, Friday we have Baker Hughes rig count, which at least used to impact oil quite a bit, but I think we're solidly on the trend there. I mean, it was very interesting a year ago. I'm not sure how much it matters now. Yeah, Ryan, I was thinking about taking a few cases of Coca-Cola to Venezuela and exchanging it for beachfront property. Yeah, I've always wanted to be a South American Coke dealer. You want the Coke? I got the Coke. Yeah. So, and by the way, I noticed an increase in posts, trade ideas from you guys, and I think that's a good trend. So thank you for taking the time and practicing and putting together your ideas and sharing them with others. If you can, read other people's posts. See, that's the thing. Post your ideas. It's a symbiotic relationship. You got to post one or two of your ideas every day, and then I think even more beneficial is look at someone else's post, see what they're talking about. Do you agree with it? Do you disagree with it? Is this a trend trending down? Is this a breakout? Should you sell this retracement? What does the pivot mean? You know, I mean, this is a very nicely done post. And then, you know, I certainly like it. Oh, I forgot, I have to get that fixed. Or leave a comment. And by the way, you can follow people. So if you see someone that makes good posts every day and you really appreciate it, you follow somebody, you're updated immediately via email. It says, hey, this person has made a post. And you're like, I like this person's post. And you look at it, great. Looking at the daily, looking at the 4 hour, there's some good news here. So this is a breakout to the downside, but they're expecting a complete 100% reversal back into the trade zone. Why? What kind of pivots? So on and so forth. you should leave a comment. No, Marina, that's been deleted, all of them, 200 posts. And then Marina, if you have feedback for me, email me, wayne@fxbootcamp.com. Let me know what you need for this to be a success. Okay? Yeah. Just let me know, Marina. Okay. So on the yens, do we want the yens to go up? Do we want the yens to go down? What's your thought? Okay. So when you're weak, first of all, there's an opportunity, higher high, higher low on Friday. And then you open outside the pivots. Well, Wimpy, if you follow someone that has a long-term trade plan, literally click on it and follow. You can follow up a few days later and ask them, post a comment. Hey, how did this turn out? I'm interested. And they get emailed immediately. Marina. No. Email me comments, Marina. Let's work together on it. Okay. Higher high, higher than that high. Okay. This is something that we were working on specifically last week, wasn't it? Looking for double bottoms and breakouts. And then in this situation, you'll see we opened this week above the pivot area. So there's no pivot swing if you're a bull because you're already out of position. In this case, what you use is the moving averages. Okay. So once again, if you're looking for a swing trade long based on swing trading strategies, you'll notice you're out of position. Doesn't mean you can't trade. It means you need a different type of support because there's no support up here, only resistance. And you're a bull, you only buy at support. So you use the dynamic levels of support, you kick it off the moving average. We have now hit the projected top for the week. And now swing traders will know, right, that this is a counter trend setup. Okay, doesn't mean you have to sell there, but if you're looking to be a bear, that's where you would want to consider being a bear. It shouldn't make you bearish. If you're already bearish, then that's a level that you should be looking for. And in particular importance on a Monday or a Tuesday. If it was Wednesday, almost no importance. Okay? There's your British pound. Now remember, because there's so much news, maybe this is an unusual week. We blow through these pivots. In that case, you would want to use monthlies. Okay, monthly resistance quite high, monthly resistance quite low. We're basically stuck in the middle. Okay. What do you think of this? Well, the bullish entry is here. And the target is there. Here I am. You send me an angel. Here are you. All right. Okay. USD yen. Okay. Look at this. Amazing coincidence, huh? That is last week's predicted low. It touched it to the pip and held. I think we talked about it. I'm not entirely sure. I would assume we did. And then this is the projected low for the month. So what we need to do is identify the old levels and observe breakouts or buy dips. On a 4 hour, we have a 4 hour 5A cross up, which is very interesting, right? And we're breaching the 21. These are all important, technically speaking. Okay. Notice, is this support? Yes or no? Yes, it is. Higher high, higher low, gone. Right? I know last week, maybe even the week before, we spent special attention on such things. If you're at somewhere that you believe is support, hardcore support that everybody should see. Gaps don't always fill, dear. Gaps often fill. So the highs, lows, and pivots are the TradersWay version of MT4. No. Calculating pivots uses the high and low. The formula for the central is high, low, close divided by 3, right? No, gaps don't occur monthly either. Okay. There you go. And let's make a comment on the gap thing. And I do have gap stuff on FX Bootcamp, but try to move it over there. What you don't want to do as an amateur is sell gaps. Like in this case, it's an up gap. So what an amateur would do is they would sell it because, and to pick on your comment, because gaps always fill. That's gambling, and that's not what we do. So if you were up in a gap, let me try to zoom in a little more. It's kind of hard to get there. If you observed a trade, like if it hit a key level of resistance or a psych level or something like that, I'm trying to think of even the right scenario. You can try to fill it, but you shouldn't just sell in this case because of the gap. What is more ideal is you let the gap fill and then you continue in the direction of the gap. So what's better is instead of selling into a bullish gap, you buy the retracement. So I'd rather you be long here than short here, if that makes sense. So general gap theory is, in this case, it gaps up. You let the gap fill, and then you buy it. Okay, you see what I mean? And an amateur would just sell, and they're like, because the gap has to fill. No. The best story I can give you, it was a reverse of this actually. I was in quite a bit of trades. I can't remember, maybe just 10 trades or something years ago. And I remember it clearly because over the weekend, some news happened. And I don't remember what it was. I don't remember the currency pair or whatever. But I remember I was in 10 trades on a Friday. I got all my stops locked at break even. I'm up 25 or 30 or 40 pips, whatever, per trade on average. Doing well, but they're all just begun, right? And anyways, over the weekend, there was a news event. And I thought it would be pro my positions. So if, let's say I was buying pound, and so I had some pound yen, some pound Swissy, whatever. Um, anyway, so some pound news came out, and I thought it'd be good for pound. I'm like, yes, I have 10 trades open, and I'm long pound. And the news came out pro pound, and this was great, right? So I'm smiling all weekend. I got a skip in my step. Can't wait for the markets open, right? So I'm finally, I'm watching the watch Sunday afternoon. Market's going to open. The market's going to open, right? So I sit down on my desk and I'm thinking, I might be up 500 pips. I might be up 1,000 pips. This is great. This is going to be fantastic. And the market dropped like 200 pips. I'm like, no joke, I'm down like 1,000 pips. And because my stops are at break even, but the market gapped, which means price never actually touched my stop. So I'm actually negative 1,000 and all my stops are at break even. So it has to rise to get to break even. It's just like flabbergasted, right? I thought I was going to be up 1,000 pips. I was down 1,000 pips, and just so I knew how to trade a gap. So in this case, the gap was against me, okay? And I needed the market to go back up. So I saw the gap and I said, all right, I want to hit panic here, but I'm going to watch it candle by candle by candle. And I'm going to set this up, and I created a little zone that would be support. And I said, if it goes any further than that, I'll bail and I'll take the huge loss, and it'll ruin my month, but I'll make it back, right? So, or I let the gap fill. So as long as I'm not dropping further, I'm going to be patient. I'm going to let it rise. And sure enough, over the course of about 3 hours, I watched every 1 minute candle up, and up and up and up and up. And I didn't make it all the way back, but I got towards the gap, and then there was, I think, a psych level and a pivot point or whatever. And I just exited for, I think, half the loss. Instead of losing 1,000 pips, I lost 500 pips. And, over the course of, a week or two, back to break even. It's fine. But I did a lot better because I knew how to manage my risk based on gap trading. So right, I didn't buy to fill the gap. I could have, but to me, I just managed my stop, managed my risk. Okay, so whatever. Be patient. Okay, so don't sell a gap just because it's there. Now, if you were to scalp it on a 1 minute, which is a little bit different, you still sort of need an entry. So what are you trading? The 5-8 cross? I mean, so let's say you sold this 5-8 cross down, you would have been knocked out within 10 minutes and lost hardly any money, So it's the people that sell it big. It's not a scalp to them. And oops, and hours go by and you're still short and it's rising. See, that's not gap filling, that's just bad trading. Right. So if you're going to trade it, you need to manage it and all that kind of stuff. You're not supposed to lose a lot of money trading gaps. So if you did, for shame, don't do it again, right? Okay. So you can see how bulls were buying at support. You see how it came down in here? Weekly central. Now, in this case, remember the other pair? What was it? Pound yen maybe? It opened it opened high, so you couldn't use pivot points to set a swing, so you had to use the dynamic level of support. This one opened in the buy zone for bulls. It is a swing. Okay. So the target, not today, of course, but the target by the end of the week, we should hit 110. Doesn't mean we will. We haven't gotten through here, but that's the plan. You can see people are doing it. That's the buy zone. Now, and all this set up on last week's predicted bottom. Remember weekly and monthly predicted bottom? Isn't that where you buy? At weekly and monthly support? Then it gapped higher. Now you can see people are buying dips. So hopefully we can make it up through here and through this area. Now, do you see where the bears would sell? Right here, guys. Okay. If I was a bull, this is what I'm worried about. And the next one is here. Come on, I'll see if I can draw it straight. Okay. And then the third one is here. Okay. Those are the three levels of resistance that if I'm a bull, I'm going to be worried, aka maybe I should take some profit. Okay. Because I think a bear would want to sell here for pivot reasons, sell here because it's resistance, or sell here because it's a bullish target. Okay. And as a bull, I'm buying dips, right? So you can see buy, buy, okay? So it's going to come here, probably down, breakout, pull back, that kind of stuff, right? Big round numbers, that's cool. Now, interesting, Greg, big round numbers, for some reason, in my observations, are most powerful on USD yen. Maybe it's just large institutional investors like USD yen. So they do things like sell it at 110, buy it at 109. More than I see other pairs, because sometimes other pairs are influenced by other pairs. Okay, so for example, if the world dumps the euro dollar, euro yen, euro Swissy, euro pound. All of these things are going to be influenced by the world selling the euro dollar, because the euro dollar is 40% of everything, right? 40% of all currency trade. It's also heavily influenced by influences the dollar index. Okay? So euro dollar can affect all these other things. So you might see euro pound moving, but it's not the euro pound, it's the euro dollar. Okay? USD yen, I think, is another sort of like euro dollar, like people trade it and it will affect everything else. So if USD yen goes up, all the yens are going to go up. The USD is going down, all the yens are going down. Why? Because most of the trading is going to be USD yen and less Kiwi yen, maybe. Okay. Yeah, no, it's cool. Big round numbers, huh? I'll check that out. Thank you. CAD yen, I guess. Still making money. So I have what, 100 pips locked in for profit. Maybe I'll lock in some more. Just a little bit. Don't need to be greedy. 150 pips. All right, so I got 150 pips locked in. I could jack it all the way up here, but see, I want to stay in. But if I move it to here, oops, if I move my stop to here, that's 250 pips profit here, and my trade is actually up 375 pips. Do I lock in 250? Yeah, might as well. All right, so I got 250 locked in. Any other questions? See, you could have bought this dip, you could have bought that dip, you could have bought that dip. It's got a lot of resistance. Look where we opened up. Yeah, Greg says if the yen pairs are moving, it could be a big money maker. Well, if you go back to the third week of August on almost every one of these yen pairs, you'll see that the low in these yen moves was the third week of August, and I told you that would happen in January. It's an amazingly lucky call. This one, however, was at the end of the second week. The first day of the third week is here. So this is the third week of August. Could be the time when it reversed, don't you think? So, and you, life is beautiful. Oh, gotta get what you got, gonna get. Here I am. Will you send me an angel? We're getting pretty close to the monthly top, huh? This is the worst case scenario for me because I don't want to get out, but in somewhere in there you kind of have to get out. I mean, look at this up here, weekly and monthly target. But I don't want to take profit. So I have 250 pips locked in, worst case scenario, but I'm up 375. So at some point, if I'm up in here, let's say at 500 pips profit, even though I don't want to take profit, I probably would have to get, you know what I mean? I probably have to get out anyways because that's what I'm supposed to do. No, I don't scale, Jeremy. I make decisions. Yeah, so I was watching this last week and we talked about it. Let me try to clean this up. Trying to find a bottom on this one, right? And so we had this as support and we had that as a breakout. So I don't know where you want to put your breakout. Is this the new consolidation? Okay. Buying here is a beautiful swing trade at M2, but kind of a hope and a prayer at that moment, I would think, right? I mean, you'd have to be pretty aggressive just to say, well, it's at support, you know, what are you going to do? Put a stop 15 pips away? I mean, maybe, right? But it's very hindsight. What I would like to see is, you know, even this high, man, a breakout, I guess it would have to be here. Still feels like a lot of hope involved, but we're going to need breakouts, right? Because that doesn't even get me through this one that we drew last week. Last week we said we want to breach that. So I don't know. I think I still want to tiptoe into other pairs and come back to this after the breakout. Okay. Aussie, take a look at that one. Also consolidation mode, but doesn't it look more bullish than bearish? Okay. Remember last week, double bottom? What do you look for after a double bottom? Higher high? After a higher high, what do you set up for a buy? Roll reversal at old resistance as it becomes support? Sweet. Okay. Isn't that lovely? So after you make a higher high, same sort of scenario. So for example, you could fib it. And somewhere between the 382 and the 618 Fibonacci retracement, you would assume to find support. Well, how about a double bottom at the 50%? Yeah, but Wayne, that's monthly support. Yeah, but what, right? Monthly support pivot, 50% Fibonacci retracement after a higher high on a higher time frame. See, this high is higher than that high. So you look for roll reversal. Where did it find support? At the support pivot. That's an amazing coincidence, don't you think? And you rinse and repeat. So hopefully this steps up. Okay? Meaning, you know, you drag, let me go back to this. You drag this consolidation over and it's not trending well, but it's stepping is how I describe it. It's not an elevator, right? You have to walk up the stairs. It's still hard work, but at least you're not falling down, right? Better than a ladder. It's not an elevator, but it's better than a ladder. What a beautiful man. Blessed. Gotta count your blessings, guys. Woo! Right, that's what I want my t-shirt to say. Good looking and humble. I saw one the other day. It said, oh, how did it say? I can't even remember now, but it was fun. I don't know. I can't remember what it said. In big word letters, it says something like, I'm a nice guy. And then underneath it says, just kidding, go F yourself. Something like that. It was pretty fun. Here I am. Let's do some commodities. My son has a shirt that says, I never finish any. A rude Henley. Don't say that, Henley. It's raining, 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 raining. Welcome to the jungle, baby. Is this the one where I'm teaching you the old man in a hot bath? That's what it smells like. Gee whiz. You see that? That's what we did, didn't we? What do you think, guys? It's interesting, right? Look at this trade plan. Higher high, higher low, up to the pivot area. Look for the lower low. It's done it. And it's still playing off both the monthly and weekly pivots. I mean, look at that. I mean, some people still believe that technical analysis is, for lack of a better word, false. Isn't that neat? Yeah, nothing hocus pocus about it. I mean, it's just amazing. So I don't consider it predicting the future. I just consider it rules of engagement. It's how you play the game. It's right. So like fundamentals tell you why there should be a shift in price, a shift in supply or demand, right? So if there's too much stuff, price falls. I think we can all agree with that, right? If supply goes up, price can fall. That's one thing. But when price falls, eventually falling prices will bring in buyers, won't they? Because the deal will just be great, right? So the pair of $800 swim trunks. I'm now a proud owner of said swim trunks. Great. I'd never even heard of such a thing until I went to Harvard, and I'm like, why do you wear those? They look like swim trunks, and they're like, they are swim trunks. Like, why do you wear them all the time? He's like, they're awesome. They're $800, and I just like them. I'm like, what? You got an $800 swim trunks? Like, I didn't even know these things. I'm like, such a provincial boy from Saskatchewan, right? Farm boy, for lack of a better word. And I talked to my other friend to buy, and I'm like, this idiot at Harvard's got $800 swim trunks. And he's like, yeah, I got a whole bunch of them. I mean, a whole bunch? I own one pair of swim trunks. They're all faded from, I bought them in 1998. He's like, yeah, I'll go count. He comes back. He's like, yeah, I got 26 pairs. 26 pairs. Not just swim trunks, of these French swim trunks. Like, I need to get a pair, right? But anyways, Stupid, right? Why do you need? And they're no better. So when I was in China, in Hong Kong with Daniel, they had like these $300 pairs. I'm like, I ain't gonna pay $300 for swim trunks, right? So Daniel, like, we go shopping in the mall. Got a pair for 10 Hong Kong dollars, better than the $300 or $500, $800 ones. But anyways, so this gets to the question, right? When do you want to buy these swim trunks? $800? No, thank you. $700? No, thank you. $600? No, thank you. $500? No, thank you. 4? No, thank you. 3? No, thank you. 2? No, not interested. 1? $100? No. $85? No, thank you. 75? 65? No. Right. So anyways, finally, these $800 pairs of swim trunks are like $12. I'm like, yeah, okay, let's, do you have the colors I like? No, we don't have colors that you like. Well, I don't want to spend 12 bucks. You have black ones? Yeah. All right, I'll pay you 10 bucks for black ones. Right? But at some point you buy, right? Or have you ever been in this situation? Right? You're at the outlet store and you're like, this jacket used to be $1,700, but I can buy it for only $500. One arm is longer than the other, and it's got pink stripes inside of orange stripes, but it's Ralph Lauren. I gotta have it. Everyone's gonna know I'm super rich, right? Look at me, right? But people do this, right? It's Ralph Lauren. It's made out of gold and threads from the rarest. So, I'm so cheap. My Rolex band broke. I don't want to pay $2,000 for stainless steel band because it's stupid. I just don't want to do it, right? So anyway, so we're all different, right? Everyone's got their thing, but everyone's also got their price. So oil could be falling because we have way too much oil. Great. But somebody that needs oil, even if they don't need oil now, they could say, you know what? Oil's so cheap. I can buy it now and put it in storage and get a better price than I'm paying at the moment or recently, right? So you're like, I bought oil at 50, but at 40, I could put it in storage for a month, and my cost next month will be 43, and I'm buying at 50, or I bought it for 50, so I can afford to buy it cheap and just put it in storage. So there's a price when the market buys, regardless of the supply and demand, so to speak, right? Supply goes up, price falls, but the falling price should bring in new demand. Sort of right? So there's this idea of the fundamentals and the seasonality has a play in trading, right? But then the market, the people that make the money from all these transactions, they also have their own little world, right? So it's like the euro was super weak, super cheap. Brexit and all this kind of stuff killed the euro. Perfect time to invest. If you think the worst in Greece is over, if you think the worst is in Spain is over, the worst in Italy is over, worst in Ireland is over, you think the worst is over, and 50 years from now, some of these countries are still going to be independent countries. If that's what you think, then you need to have bought. I think a year ago, or even 2 years ago, we started talking about these things. Like fundamentally, the only thing that's changed is the drop in economic activity has stopped. Now at that time there was no inflation, no real growth, but it wasn't collapsing anymore, and things are cheap. You see what I mean? So things happen. How about when the euro was collapsing? I don't know how many years ago this is now. Draghi was brand new, euro's collapsing, and Draghi simply says, I will do whatever it takes to protect the euro. The euro skyrocketed. the, the European economy was literally on the verge of collapse. Greek bonds, 2-year bonds, were at 20%. Spanish, probably 14%, so on and so forth, right? Literally the verge of collapse, and the euro was unbelievably strong. And this gets really difficult for newer traders. You're like, the economy sucks. So the euro should be weak, right? Well, how about flip things around? When the United States was at the verge of collapse, and capitalism as we knew it globally was at the verge of collapse, the United States dollar was unbelievably strong. The economy sucked. We had 10% unemployment, no growth, no inflation, interest rates dropped to 0, and the dollar was unbelievably ripper strong. So I'm saying the stuff you get taught in a textbook isn't wrong, but there's more to it. And that's where technical analysis comes in, the study of price over time, because it'll tell you when a shift of supply and demand has changed. Maybe not supply and demand fundamentally, but supply and demand in activity. You see, right? So has anything fundamentally changed in the last 2.5 weeks? No. But still, there are places to buy and there are places to sell. Right? You see what I mean? There's still places to buy. There are still places buyers will buy. There are still places where sellers will sell, but nothing has actually changed. And that, so the people with longer horizons, they kind of brush over this. They're floating around in the clouds. They're like, yeah, oil is this one big homogeneous thing. You're only long, you're only short, and there's nothing in between. And if you try, it's all noise. It's actually not noise at all. If you're an active manager, there are places to buy, or sell. If you're a passive manager, you buy and walk away, and you don't want to look. So it just depends on the type of manager you want to be, or the type of manager you are. Right? So have you guys heard of smart beta? You know, you can try to combine the two here. And you could say you're a bull for long-term fundamental reasons, simply that oil won't drop below 40 bucks again. How many people think that's true? In the next 5 years, oil will not drop below $40 a barrel. Like maybe it falls, maybe it touches 40, maybe it holds around 40, 39.80, and then back up, but not 35, right? How many people would say that? 40-ish is the floor. We're not going to see that any lower over the next 5 years. Okay? So we're at 48. So your analysis tells you that you have $8 worth of risk in a $48 market. Okay, you see what I mean? So your job could be to build a position now and buy dips in oil. Sean says, who really knows? No, nobody knows. What do you think? And I don't care about your opinion. What I care about is your proof. Show me what tells you up is more likely than down. You see what I mean? Well, if you look at this report, if you look at that report, if you look at the EIA and the IEA and the EIR and the ORE and all these different acronyms, look at OPEC, you look at global macroeconomics, all this kind of stuff. You throw it all together. You should be able to put together a giant report. This is what analysts do. Now, if you can't afford an analyst, you are an analyst. So, boom. This is my outlook for the next 12 to 36 months. Okay? And it could be very, very general, and there's no timing, right? All you're saying is not down. Okay, great. So if that is true, okay, so you're going with the market. That's what the beta is. Understand? The oil market is more likely to go up than down. Now it's more like sideways to up, but not down. And then later, maybe even some up and sideways instead of sideways and up. Okay? But whatever it is, I hope you understand what I'm trying to get across. That's what you've decided the market is going to do. There's no timing here. Just 6 months, 12 months, 24 months, 36 months type thing. More up than down. You have a floor identified. Therefore, every dip you buy and hold. And you can do that in different ways, you know. But every dip here, you could buy it. And it might be just weekly swings. Every time you can buy at a pivot cluster, you buy stop goes at $39. So you buy it at 35, put a stop. Okay. Now with oil, obviously that can get very expensive to have, you know, a 700 pip stop because that's $7,000. But it's mentally you can understand that. Or if maybe it's a currency pair, you know what I mean? And you're like, wow, 700 pips. Yeah, well, put in one mini lot instead of one standard lot, and just kind of build it up. But the smart beta is that you decide what the market's going to do, and then you buy opportunities in that market analysis. That's where the technicals come in. And you're like, well, every opportunity I can buy at a pivot cluster support, you buy, jam the stop, take a walk. Buy another one next week, the week after, the week after, the week after, and maybe by the end of the year, you got 15 of these. Okay? Pinko says, well, CAD yen maybe. Well, yeah, I did that a month ago, right? I did that the third week of August, like I told you to do it. I get it as an example. It's gone, but there were 5 other opportunities since then, right? But that was just an example. Doing it on Aussie yen. Yeah, there was another good one there. I had 2 or 3 on there that got wiped out as examples, but whatever. Food for thought. Portfolio type trading. If you got hired at a trading firm, like a hedge fund, you'd be in charge of one particular thing. A euro trader, a Swissy trader, a yen trader, whatever. And you need to track all the different things of that one currency. You need to be the expert in that one currency. And you might spend some time looking at these charts and looking for opportunities. You're not making up your mind like, should you be buying pound or selling pound? You already know that. So if you're a buyer of pound, you're like, are there support areas this week in which I could buy it? Because you've made a beta decision. So now your alpha is where to buy. So I was listening to an interview with a technical analyst who won an award recently and stuff, and she was just talking about, you know, her day. She manages the team and all this kind of stuff. And she just talks about, you know, reviewing 500 charts. Just like it's tedious, but you start to see everything. So you analyze gold and oil and silver and corn and wheat and the S&P 500 and the Nikkei and the DAX and, you know, just chart after chart after chart. It doesn't matter, just everything. Just, and she looks for breakouts. She looks for overbought and oversold conditions. I'm like, this is exactly what we do. Except she gets paid $30 million a year. So if you do what she does, shouldn't you be doing what she does? Like, you're capable of doing what she does. So shouldn't you be doing some of the things that she does? Like, couldn't she be the mentor? Couldn't she be the perfect trader I talk about in my book? On the weekend, she sits down with hundreds and hundreds and hundreds of charts. And she says, yeah, it's tedious. She doesn't say it's easy. If it was easy, everyone would make that kind of money, right? All right. So fundamentally, Brandon, central bank reports are good. Another one in there comes out a couple of times a year and then is updated a few times a year is the IMF. IMF is great. Okay, so that's fundamentals. You should also take a course on fundamentals. You should take a course on macros. There's a lot of things, right? So I'm taking a class right now on macro and microeconomics. Right now, today, I have class today. They're studying microeconomics. You know, I know a bit of this stuff already. It doesn't matter, right? Just being in love with the work, being in love with the knowledge, being in love with what you do, being in love with being a currency trader. People say, "What do you do?" And you're just like, "Oh, let me tell you, because I love it. I'm a currency trader, and it's awesome." This idea of having to know absolutely everything in the entire world, politically, economically, all this kind of stuff, but then to also study charts to accurately predict the future every single day. And we got, stuff going on in the Middle East. We got stuff going on with North Korea. We got all this other stuff. I mean, it's crazy awesome. I'm a currency trader and I watch hurricane trajectories. I'm a currency trader, but I watch the price of wheat. I'm a currency trader, but oil and gold. I'm a currency trader, but the stock market in Japan, in China, in Germany, in London, in the United States, and so on and so forth. They're like, it's awesome, right? And that's where you just want to be, just be in that zone. So you can be like me, taking a class on microeconomics, the stuff you learned when you're 19, stuff I learned when I was 19. Doesn't matter. Yeah, it's repetitive for me. Sure. Supply and demand. This is what we're talking about. Supply and demand. But it doesn't matter to me. I love it. It's like, oh my God, I love this stuff. Yeah. Yeah, Tucker. Don't learn too much, Tucker. So anyways, I don't know. Like I said, couple, 2, 3 weeks ago, when the billionaire guy says to me that he was pitched on some automated system that'll trade currencies and other things. And I look at him and I'm bewildered. I'm like, why would this guy avoid doing the work for you? That's what you want? You're going to give this guy hundreds of millions of dollars and he's trying to figure out ways to not do the work? Really? Oh my God, I love doing the work. That's where the action is. I'm a trader because I love it. Why would you give your money to someone that's not in love with what they do? How good could they possibly be if they're trying to avoid the work? Wow. So good luck with that, dude. And that was the end of that. So it's cool. He responded well, by the way. So anyways, gotta go, man. I have a hurricane. I have refugees. I went 2 hours today. I'm sorry. Well, hour and a half, I guess. So I apologize for taking too much of your time and running over and stuff. But it's a good trading week. Go with the British pound. probably going to be some opportunities there. And then we end the week with the dollar stuff, retail sales, inflation data. Great trading week. So go pound and take a moment of silence for those who have been affected by 9/11. Huh? So a moment of silence, and then I'll talk to you again tomorrow. Moment of silence. All right, thanks, guys. I'll see you tomorrow. Just trying to survive Irma, huh? Bye bye.